Guys, happy Friday. Welcome to the Independent Investor Channel. My name is Ryan. We're filming from Virginia Beach, Virginia. It's really good to be with you guys. You know, a lot of folks out there like arts and crafts, cars, you know, whatever your hobby is. Mine just happens to be money. So this is really my opportunity to come and talk to my community and you know, for an hour a week and kick around what happened in the stock market this week, kind of engage with each other on what particular stocks maybe we've entered into some positions we'd like to share with the group. I've got a few positions that I'm going to share with you guys this evening. I'd like to welcome a few members of the group. Stings 123 was the first in the group, and was very excited. Got a one-on-one session. Didn't hit me up with any questions, so no big deal. Just sitting here, kind of preparing for the message this evening. Obviously, the stock market today ended at another record high. Certainly, the longer and the more progressed we get in this bull market, I would encourage each and every one of you to employ the dual philosophy rule in your investing. In that if the stock market continues to rise and go up in this later innings of the bull market, how are you going to benefit from that? And furthermore, if the market does end up correcting back, how are you going to benefit from that? And the way you do that is to build cash up here, continue to save that cash base as you continue to dollar cost average your investment account going forward. And it basically sets you up to not get overextended on the investment side and to set yourself up to basically be in a win-win situation. And that's really a lot of my philosophy that I kind of throw out there. I've got Nyella on the line. Hello, good evening to you. Hope everything is well in Canada. I've got some great representation in the community. I've got some folks from Australia that hit me this week. I'd like to give a shout out to those guys. I've got Larry Mesa on the line. I've got Jared Odell, who's really one of my top ambassadors in the Facebook group. And so I'm going to allow the group to kind of make their way in here. There's a lot of things that I kind of want to address with the community this evening. And to kind of kick things off right away, I'd really like each and every one of you guys, you know, when I started the channel, I talked a lot about empowering. And there's a lot of YouTube channels out right now talking about finances, talking about investing. And I just want to make sure for the community that tunes into the Independent Investor channel and tunes into the message that I put out there, I certainly want you guys to really understand why it is you invest on your own. Okay, I don't need you to just invest with blind faith. Okay, that's everything that I talk about in my message has everything to do with identifying investing in blind faith is usually the catastrophic misstep that new investors take, in that they're excited about investing and they want to really gravitate toward or embrace the very first message that comes their way. And I highly encourage you to ask whatever questions you need to validate what's being put out there through the airwaves. And I would just ask you to be critical of the information. I'm gonna steer away from being specific with my observations, but I really find that there's probably a lot of younger, unknowing investors out there who are gravitating towards certain messages and basically investing in the stock market because this person told me so, or they're very charismatic about, you know, their message. And you need to validate why it is you invest. Don't do it because Ryan told you to do so. All right. I do contend that the weekly support that you get through the live feeds is a good thing. I would really challenge each and every one of you to kind of question whether or not you have family or friends out there who are involved with the financial planning community, to challenge that thought process. I do it all the time in my circles, and it strikes up quite an interesting line of discussion with my friends and family that I'm trying to really challenge the status quo, because the channel's been alive and well now for a little bit over a year. And one thing that I have found is that in my daily discussions with people, it only further validates my suspicion that very few people know about the power of investing on your own. And if you don't deliver it correctly to someone, it can really scare somebody out of the stock market. It can be like, wow, are you kidding me? You do this on your own. And that kind of comes with the validation piece in understanding that you don't have to be an analyst, okay, to make money in the stock market. As a matter of fact, you don't have to have a lot of knowledge about looking at individual stock, right? You just really need to understand that there are key strategic steps that you're going to take. And over the next couple months, I'm going to be rolling out a series of videos. I'm going to get back into shooting content. This is a fun live session where I get to really engage with the subscribers of the group and the community and really just kind of offer up that support, let you guys know that I'm still here. I'm still doing my investing. As I mentioned on last week's live feed, I did enter into 6 different fixed equity positions, and I'd like to offer those to you guys now. I've got the intermediate bond account from Vanguard, which is VCIT. I've got the long-term ETF through Vanguard, which is BLV and VCLT. And then I've got the short-term, which is BSV and VCSH. And then finally, the total bond market, probably one of my favorites, is the BND, okay? So I would encourage you guys to kind of look. What really caught my eye is where the charts are currently with regard to fixed equity. They're actually fairly recessed off of their highs. And I think for any of you guys out there who are sitting on quite a significant amount of capital and you're looking to start some bond positions, now really might be a good time to do that. We've got interest rates on the rise, stock market's at an all-time high. And even in a well-balanced portfolio, you should be looking at the prospect of at least starting some positions like that. Now, if you're under $10,000 to invest, I say stay aggressive, okay? Go ahead and do your ETF, your stock market exposure through ETF and or single stocks. I'd like to see you get up to that $10,000 level before you start entering into single stock exposure. So when we start talking about validating for yourself why it is that you're investing in the stock market, that's really kind of where we look to start. It is how we take a set amount of money and start meeting those short-term goals, which is 1,000, 5,000, 10,000. Once you get up to that 10,000, really, I'll be the first one to kind of say, hey, you're doing great. And then it really starts to compound after that. It's amazing to see the power of the money grow. I watch my money grow every single day. And it's amazing when I tune into my account every single day, it doesn't seem to move when I look at it day to day. But when I look at the amount in retrospect to where I've come from, a lot of people know that I started both of my Roth IRA accounts many years ago, probably 11, 12, about 13 years ago now is when I actually started my Roth IRA accounts, and I sold my car. I sold my car for $3,000 and I split the $3,000 and I started those accounts with $1,500 each. That was one of the major milestones in my investing career, is making that decision, to sell, a car and have enough want to become an investor to take that and split it and start those 2 accounts. Now, each of those accounts are flirting with $100,000 each. And so you can kind of see that over 10 years now, I've funded those accounts over the years. And to be honest with you, if I told you, or if somebody were to say, hey, 10 years from now, each of those accounts would be worth close to $100,000, I'd say you're crazy. And I can't really put my thumb on, day to day how we've progressed to that amount. All I know is that the plan was initiated, and the plan, I'm just basically living proof that if you do initiate a plan and you have enough want and desire to do that, and you've validated that plan for yourself, you can make it a reality for yourself as well. All right. So I kind of want to scroll through and see, guys, I've got a pretty good group in here tonight. I really appreciate. I've got Cal on the line. I've got Ernest in the group as well. I want to welcome you specifically. I've got 1979 Wood. Very, very cool, guys. Thank you so much. I've got Golffish1, who's one of my Plank Owner subscribers, who's really been with me since the beginning, and I really appreciate the loyalty, guys. Certainly some of the plans for the channel before I start to get to some of these questions. I feel like the channel is progressing and it's growing quite nicely. I really feel like there's probably way more people out there benefiting from the message that we're putting across than I could ever reach one-on-one in my passing with people. Now, I still do it because I love the topic and I love helping people. But YouTube just provides a platform where I can reach so many more people on an initial front. And I understand that a lot of people are taking that initial message and they're actually taking that initial message out to people that they know in their network. They're doing it verbally and they're also doing it through Facebook. So that I really, really appreciate. There's no better way for me to grow the Independent Investor channel than through referral. And I would have it no other way. Okay, I don't really need a bunch of people coming on to the Independent Investor channel who really have no interest at all in investing, or maybe has not been referred to the channel and maybe has been given a little bit of preface as to what type of information we look to push through. I'm not an entertainer. Okay, I'm strictly passing this information for you guys to take, and the level of success on the Independent Investor channel will be predicated on the amount of success each and every one of the viewers can take that information and deploy in their own lives. It's very, very important. Otherwise, what are we doing? Okay, I'm not just pushing out content to push out content. We're doing it to make an impact, and I do believe that we are doing just that. All right. I will address the first question here, actually, is from Golffish. Let me scroll up here and see if I can't get this. Hey, Ryan, just hit the free trades level in my self-directed Roth. Thanks for all the advice over the past year. Okay, so what Golffish is referring to there, I believe Golffish is an investor with Merrill Edge, okay? And these are some of the incentive levels that I talk about. I get hit with all kinds of questions with regard to what account do I open? What account do I open? What account do I open? And I answer this on every video I push out there. The account that you should be opening, if you're less than $129,000 a year in income, which is most people, me included, all right, is the self-directed Roth IRA account, okay? And a lot of people are saying, what brokerage account? What brokerage account? What brokerage account? All right? Golffish, just like me, we work through Merrill Edge, okay? And I say this all the time. Brokerage accounts are going to come down to your preference, and it's going to come down to aesthetics. And I don't mean aesthetics insofar as how it looks. Now, each platform is going to be a little bit different, but you're not going to be able to research every brokerage account out there, okay? The 6 that I recommend most commonly are Fidelity, TD Ameritrade, Charles Schwab, Merrill Edge, which is mine, Vanguard, and then M1 Finance, okay? Those are kind of the 6, the top of the echelon. So I've kind of done a lot of work for you. Included in that half a dozen of brokerage accounts will kind of help you streamline it. I'm sure there's probably 50 others out there that will work for you, okay? But just like I recommend Vanguard products, I don't recommend looking much further than the best of the best, okay? Don't beat yourself up with scouring over brokerage accounts for 10 years, okay, at the expense of taking the leap of faith and opening that brokerage account that offers the self-directed account. I know Ally offers it as well, okay? But what Golffish is referring to in this question is the incentive level. Okay, now this is very, very important for you guys to understand. If you're a new investor and you're coming across this information, I'm speaking as clearly as I possibly can about acknowledging how important it is to get up to those threshold levels. I talk about the $10,000 level all the time. What Goldfish is referring to is the $50,000 level. And on some of my earlier videos, I talk about the $50,000 level as really kind of a VIP level. If I could hug you, I would. I really would, because I know with each and every single empowered independent investor out there that hears and deploys my message, eventually you will be to that incentive level. You really will. And just like at $10,000, your compounding effect and your accelerated growth is only going to multiply that much quicker, okay? With the rule of 72 and the rule of compounding interest, okay? And at $50,000, I want you to kind of think about how many doubling cycles you're going to need to actually get up to 7 figures. It's actually very realistic for someone who starts very young in their life, okay? Now, it's very, very important for you to acknowledge how important this is at that $50,000 level, okay? And I came out with videos in my chronicle about how Robinhood is actually misleading a lot of new investors with the carrot of free trades right off the bat, okay? The less obvious downfall of Robinhood is that they do not offer retirement accounts, okay? And the solution to that for you guys is M1 Finance, okay? If you guys are interested in getting in and out of stock free of charge, then M1 is your ticket, because you can do so within a retirement account offered by M1, okay? Now, is that a strategy that we want to deploy all the time? Not really, okay? If you're $10,000 or less, remember what we want to do is we want to set those baselines in that portfolio and get that carefully and responsibly building in that account, okay, guys? We don't need to try to win the lottery overnight, okay? Gambling and trading is not something that I recommend for a new investor, okay? A new investor in my mind is someone who hasn't met that $10,000 threshold just yet and needs to go through the preliminary baseline portfolio building steps that are necessary. I will say congratulations to Goldfish for meeting that $50,000 threshold. And it was one of my favorite videos that I've put out. We're really kind of an unknown channel on YouTube. Got about 6,500 subscribers. I guess we're approaching 7,000. We will get to that $10,000 mark here, guys. Again, I base a lot of the value on this channel with the 3 or 4 or 5 or 1,000 people that really like the content and are really relying on the content to help strengthen their financial lives. Okay, so that's really where I put the value. I've said it many, many times. I really could care less whether or not I've got 198,000 subscribers or 1,000 very loyal subscribers, and in each of those cases are being helped. They are being helped with the information that's being put across. So I congratulate you. That's an excellent job. I just think to bring it home, when you guys are looking at your brokerage accounts, I really want you to kind of try to understand or ask them. Ask those scary questions. What are your incentive thresholds? In other words, what monetary level do I have to get to for you to consider me a VIP and let me enter into stock positions free of charge, okay? Vanguard has very high incentive levels. That's really why they're not number one. So I would rather use some of the better incentive platforms like a TD Ameritrade, Fidelity, etc., and just fill those accounts with your ETF products offered by Vanguard. Okay, you don't have to hold the Vanguard account to hold the Vanguard products. Okay, you don't have to do that. That's a big misconception that I get hit with all the time. Can I buy Vanguard products in another brokerage account? For example, Merrill Edge. The answer is yes, I absolutely do. So I enjoy the low incentive thresholds in my account, but I'm also enjoying the low expense of the Vanguard products within my brokerage account, guys. Very good question. Congratulations. Be the first to pat you on your back for, for the independent. And you've been with the channel for a long time, and it sounds like you're deploying some of the strategies that we put forward. I would just charge the group, honestly, if you've had some successes like that. There's no better fuel for me than to hear successes on behalf of the people who are taking, consuming, and deploying the content on their own and making themselves financially secure for themselves. There's no better fuel for me. There's no better payback for me than somebody to come across and say, hey, I deployed some of your information. I'm meeting some of these financial milestones in my career. Congratulations. I've got Avi asking about Facebook. It was really one of my, I didn't add it to my list. I'm going to throw a bunch of stocks at you guys tonight. I've got 7 stocks. Initially, it was 5 stocks, but I've actually added 7. And then also some really good entry points on my stocks to own forever. With regard to Facebook, you are getting a very rare entry point on Facebook right here. They make a ton of money. I'm still a shareholder. I did parlay some of my Facebook shares. My position got way too big when it ran north of 200. But I think the price to earnings ratio here, I believe it's in the low 40s, if I'm not mistaken, on Facebook, is a bargain. Okay. And in the long scheme of things, this stock at $170 entry point is going to seem like a gift. Okay, so for these short amounts of time where you're getting these small increments of entry point, Amazon is even harder to buy on a dip. Google is the same. It does provide you some entries as well. But Facebook is absolutely a buy right now. And there's so many cornerstones that I could pick from my favorite sector, which is technology. I'm long Facebook. Like I said, I own about 30 shares of Facebook right now. I was upwards of 50, and I went ahead and parlayed 20 shares. I was up significantly when it was up over 200, and then took the rest of the 30 shares down into this downturn. And I would be tempted to buy more Facebook right here. So I do not hesitate in offering it to you guys if you wanted to add a little bit of a little bit more. I don't even want to call it aggressive growth because I don't believe it is. I believe it's just growth. At a $600 billion market cap, Facebook is not an aggressive growth company. It's a growth company, and it's a very strong growth company at that. So yeah, I would endorse entering into Facebook right here. Absolutely. Check out the Chinese ETF, Crane Shares, ticker KWEB. It will dip to 40s just if companies, amazing, no Chinese banks, only tech, internet. China currently near all-time lows with a PE of 13. Yeah, I think a lot of that is baked in. I do have some Chinese holdings, Alibaba. You guys know I hold China Mobile. China Mobile has been going up. I'm approaching getting back even again with China Mobile. And I think here before long, I think it's going to be back above $50 again. So that's really cool advice. K9, thank you for throwing that into the community. I really appreciate it. That's awesome. Also check out BOTS ETF, robotics, and AL ETF. Both KWEB and BOTS have expense ratios, but both will explode long term. K9, thank you for throwing that to the community. Very much appreciate your input to the group. Chuck M is on the line. He says, hi, Ryan from Lake Tahoe. So for anybody who wants to give Chuck a round of applause, he's reporting from one of the most beautiful places in the United States of America, and he's looking to brag to everyone else in the community. So Chuck, thank you very much. Lake Tahoe is one of the coolest places I've been to in my life. Greetings to you. Thanks for coming on and joining the community. Got hit with some really, really interesting stuff this week. I've parlayed back on my involvement with the Independent Investor channel. For that, I slightly apologize, but I am going to be looking to get more frequent uploads online. Right now, I am too blocked with my responsibilities in other aspects and phases of my life, and I have to put a little bit more attention to that. However, for consistency, the live feeds on Friday will continue. That's why you guys see the majority of the uploads are my Friday uploads. But I will pick up on the normal process. I've got a ton of topics to address, but for reasons I'd rather not disclose on a live stream, I've gotten my attention elsewhere right now. When I get that content online a little bit closer toward the holiday season, into Thanksgiving and definitely into Christmas, that's a very, very hot time for YouTube. And I'll be looking to push out a lot more content there once I get some backlog, because I have a ton of topics that I need to address with a lot of my new subscribers who I think probably resonate more with the 5 to 6 minute video than they do an hour-long live feed. So can you discuss in terms of M1 Finance, what percentage of pie? Sure. K97 hit me up with this. K9, I read your comment tonight, and I apologize I just clicked the thumbs up on that. I didn't respond because I was actually going to talk about it tonight on the live feed. So thank you for keeping me honest. My pie right now is actually it's a starting amount in the M1. I have it split up right now. It is my aggressive portfolio. And I know this doesn't help a lot of you guys, but you have to understand my M1 account is the very, very top of the iceberg. And my 4 holdings in my M1 Finance are split up actually 25, 25, 25, 25 across 4 names right now: Salesforce.com, Alibaba, I've got NVIDIA, and Netflix. Okay. Those are 4 growth stocks that I really didn't want to place in my Roth IRA. I'm a little bit more passive, and it really just didn't fit that strategic approach in my Roth. So I wanted an account that could be individually funded. And I take the plan is to actually funnel YouTube earnings into the brokerage account, kind of a tidbit of information to kind of throw out there for you guys. Anybody in the community who's actually interested in starting a YouTube channel, I've got some really interesting tidbits about how I can help. Things I had to fight through and did not know. Like I've said many times, they don't send a user's manual in the mail and say, here's how to succeed at YouTube. Certainly thanks to the help of my good friend Ryan Scribner, who's helped me sponsor the channel. That's helped my growth, certainly, to help put my message in front of more people. And to him, I will be forever in debt, no doubt about it. But there's also been some strategic moves that I've made on my own to help get the name out there as well. But hate to bore you with my answer on the M1. I'm probably going to be looking to strategically add an ETF. I know I've been hit with this, whether or not you can add a Vanguard ETF to M1 Finance. I don't see any reason why not. If anybody out there in the community has tested this strategy, please drop it in the comments and I will address you directly. I have yet to do that, but right now I only have 4 stock holdings in there. Not a lot of capital. I'm waiting for the funding schedule to pick up because right now I just have started the account. I have a very nominal amount in there, not even worth disclosing, but that's my starting position in those 4 right now, and that's just the strategic use of the M1 account right now. I'm still getting familiar with the platform. I like it. It's very simple. I believe that anybody can use it as long as you tell yourself, look, I know enough to get in there and kind of educate myself up a little bit. I will be doing a screensaver as well with M1 Finance, and I will be dropping it on the channel certainly. But I think anybody who really wants to learn, it would be just as easy to get on there and just kind of feel your way through the platform, follow the very easy instructions to get your account started, and then just kind of research kind of on your own what the features of the channel are. I've got Brent in the group, and really Brent I have to credit with turning me on to M1 Finance. He was really the one that brought it to my attention, and that's really the beauty of the community, honestly. If you can take those little feelers and put those to work in your own life, I have him to thank, because otherwise I probably wouldn't have researched and picked it out on my own. Brent was really the one to turn me on. So with the financial investor in the community, if you guys want to shoot him questions, certainly kick over if you haven't already done so and subscribe to his channel as well. It is and always will be one of those channels that I endorse through the Independent Investor channel. Very good guy, very appropriate information for new investors, that of which I'm very aggressive in endorsing for new investors to make sure that they're not misled. Okay, so thank you, Brett, for that. I've got Gulffish as well throwing another question with Canopy Growth, and I want to address this. I've watched this stock; it's been really kind of on fire. So you're welcome for the shout out there, Lake Tahoe. I wish I was out there right now. That'd be really cool. Let's see if I can find this. This thing is it kind of jumps around. I haven't complained to YouTube just yet. Maybe wait till I get 100,000 subscribers. Maybe then they'll listen to me. With Canopy Growth, I had a good run this week, up 40%. Going back and forth on what to do with it. Thoughts? Well, you're obviously a winner. Okay, it's an example of one of the infinite ways that you can win in the stock market. I've been to casinos in my life. I've won some and I've lost some. And I have never, ever experienced anything in my life that I can win more often than not than the stock market. And I don't even think there's a distant second. I really don't. The stock market is one of those things that's very powerful. You cannot get emotional about making money. Nor can you even be surprised by making money. I mean, let me ask you a question. Are you surprised, about entering into a very, very, very exciting industry right now? I mean, it's groundbreaking on a lot of different levels. Obviously Canopy is benefiting from being taken over by my very favorite spirits company in Stars Constellation Brands. If it were me, and I'm going to offer my typical response, 40% you're a winner. I never get emotionally attached to stock. And certainly you could probably think about with the stock market at an all-time high. If you're a 40% winner, I would parlay some of those profits. With that said, the Canopy Growth, I believe, is going to continue north. No doubt. It's probably going to return triple digits over the longer term. Okay, they're doing that good of, it's one of those stocks that I do actually read about. I do keep tabs on it. I think it's a wonderful company, or Stars wouldn't have touched it. Okay, I really think they're looking to creep into what's going to be a $400 billion industry someday. But never ever hurts to take some profit. The other option that you have, it's either you hold all 100% of your shares, or you sell all 100% of your shares. The other option that doesn't get talked about very often is to go ahead and sell half of your position. If the position does retract back on you, then you can actually add more to the position. But if it does continue north on you, then you do benefit from that accumulated value as well. It's kind of my dual philosophy of a win-win, depending on which way the stock is gonna react. Because a 40% winner, I mean, you're a winner. I think there's probably a bunch of other options that we could think of to deploy some of that house money on, and maybe put yourself into some cornerstones in the portfolio or build up on some existing positions. That's a very, very good question. It's an industry that I'm not exposed to right now. However, I will throw this out there, and it's a good segue into my stocks to own forever. I've put this video out there. It's been relatively successful on YouTube. But when I say that I'm not exposed to the MJ industry right now, I will say this. Anybody out there who's invested in Philip Morris probably is indirectly or will be subject to that down the line as well. But I will offer this. Johnson & Johnson, which is one of my stocks to own forever, and is probably offering you guys who are looking for some of those strategic placements in the portfolio. Remember, we're looking at about 15% exposure to healthcare in any balanced portfolio for you guys that are kind of in the are eligible for single stock investment. Johnson & Johnson is one of those, and I'll just throw these names out there. You could take a small piece in Disney right here. It's around a 111. It's come back just a couple bits, a little bit. Disney is going to break out here pretty quick. Okay, so Disney is one of them. Pepsi. Pepsi's been one of my long-term holders, a great dividend payer, and definitely one of those cornerstones. It wasn't on my stocks to own forever video, but I love Pepsi, and I also own Coke as well. So any of you guys out there who are, especially some of my elderly investors, 40, yes, but 50, 60 especially, you guys could really benefit from some of these cornerstone recommendations that I throw out on my channel, especially if you guys are sitting on some pay dirt. Perhaps you're sitting on $250,000, $500,000, even 100,000, 50,000, for example, in your regular retirement account. Maybe you're thinking about starting that brokerage account, all right? There's no better place to go than some of your blue chip stocks. And Pepsi, all these that I'm going to mention are all the blue chips that are worth. Apple computers are making a lot of investors wealthy right now. I'm proud to own Apple, and I'll continue to own them for through the rest of my life. J&J, I've already mentioned. Procter & Gamble has been a real disappointment, but probably entering a phase where it's providing some good entry for you guys if you wanted to gain a small position in P&G here in the low 80s. 10 shares run you $800. That's just kind of how I think when I'm looking at pricing out stock and entering into a starting position. And 10 shares could be a nice small position for anybody who owns a portfolio north of $10,000. And finally, one of my favorites is McDonald's. Now, McDonald's, I do own a nice 35 position in. You can't ask for a better dividend payer. It's come off of its highs right here, probably offering you guys a pretty good entry point for what I consider one of the best blue chip companies, really a flagship U.S. company in McDonald's. Actually international, certainly, but rooted in America, will be valid and warranted. Nice over 3% dividend in McDonald's. So if you guys were looking for some exposure there, I've just recently, within the last couple months, took that position in McDonald's. Okay. Jared Odell, who's a good friend of the community, very active in the Facebook group. You'd be lucky to throw a comment on there and not get a comment back from Jared Odell. So I will continue to give those guys shout outs. I know Ernest, again, he's probably getting tired of me giving shout outs, but that's just the way I roll. I want to make my community a lot more personable with me. And those guys, they've earned my call outs. I've got really a couple others that that work really hard, Adolfo, and I've got one other who puts a lot of charting on there as well. And I will give that shout out next week as well. So I'd certainly like to give those call outs as well. I will quickly offer my hot stocks for you guys. We've already talked about Canopy Growth. Walmart blew out the numbers earlier on this week. It's providing you guys an entry point with every day as it hit its high. It's actually come back a little bit on what it shot up 7 bits in one day there. So for you guys that are looking for that really good blue chip company, Walmart will get it done for you. I own it currently. I own 50 shares now. But Comcast is another one. It jumped up 3% today, but at a price to earnings multiple, $167 billion market cap, and a 2% dividend to boot. If you guys are looking for a little bit of telecom sector, Comcast will get it done for you. Comcast is trading at 7 times forward earnings. And an entry point here at still $36 a share. You could pick up 10 shares at $360, guys. That's the type of dialogue we have on the Independent Investor channel. What are some of the key sectors that you can need exposure to if you're looking for single stock allocation? Comcast can fit that bill for you. All right. Cisco Systems had a great quarter, reported earnings, jumped up. That was the one that I told you guys about that I traded. Did a 20-minute, it was about 45 minutes. I owned the stock last week. I put a bigger position on it, made a quick trading profit. But for long-term investors, Cisco's really good. And for you guys who haven't noticed, Blackstone Group is really starting to move. A lot of you guys, I explain, I own Blackstone Group in lieu of a bond exposure with in my aggressive stock portfolio, and it really helps to kind of supplement some of that I want to own a limited partnership as opposed to some of the bond exposure within my Roth IRA. And that stock I'm actually starting to get some capital appreciation out of, as well as accumulating a ton of free shares in Blackstone Group over the years. I've owned that stock all the way down into the low 20s, and it's approaching 40, and it's going to continue up. So Blackstone Group is the last one I want to mention. I definitely want to get to Sash. In here is the next question. I've just moved my father's inherited IRA to a self-directed IRA and saved about $5,000 in fees a year. Yeah, that's so good. I'm so happy for you. Thanks for your advice on self-directed. It made my take the leap forward. Thanks. That right there, that when I talk about the fuel that fuels my fire to do the independent investor channel, my motivation to start this channel, I'm an introvert, okay? So me sitting in front of, a potential of a few thousand people really isn't something that I would be known for. I'm not the most outgoing person, but that really is what I resonate toward. That really is and has always been the mission of the channel, is just to push that out. And I push it out over and over and over again for that very validation that somebody has heard what I've said and said, wow, that sounds really too good to be true, maybe. And they went to validate it on their own. Or I've never heard that concept. Or wow, that sounds kind of scary, but he sure is excited about it. Maybe I should research a little bit more. Or, hey, maybe I should call my financial planner and say, hey, I just watched a YouTube guy and he's talking about self-directed investing. Maybe you can tell me more about that. Now, that would be an awesome conversation that I would love to be a fly on the wall for, all right? Because they love guys like me, trust me. And we are in the very low minority. Okay, we really are. There's not a lot of us guys out there that are talking about self-directed investing, because a lot of people hear about it and they just dismiss it right away as being something that they are not eligible to do, or they don't believe that they have the foresight and the knowledge, or the basically the validation to do self-directed investing. And it sounds like I have provided that validation for you. Thank you very much. It was kind of a question that I got through this week on what to do with inherited retirement accounts. And I've dealt with this personally, and I've always recommended the same thing. And in these cases, friends of mine who approached me with this, and I won't get into specifics about it, but my recommendation is going to hold true, and that is to reach out to the brokerage account of the receiving the funds, and also the ones that are relinquishing the funds, to understand there are some intricacies there, especially if it's in a traditional account with the deceased accounts. And there are some responsibilities of the one that is taking on that account, as well, as I'm sure you've done your due diligence to really understand your options, okay? And in some cases, a strategic liquidation has to occur. But I'm giving you advice that I would love to hear if I was sitting in your shoes and I have lost a loved one and I have inherited those assets, and I have those questions to answer for myself, okay? Always want to reach out to the receiving brokerage house and the surrendering brokerage house to understand your options there, because they are intricate in nature. And I don't think YouTube is the correct platform to push that out. I won't be making a video on that particular topic, because I think each individual situation needs to be researched on their own. And especially if there's a family accountant involved as well, certainly want to involve those stakeholders within that transaction to make sure that you understand all your options and that the transactions go as intended. All right. Thank you for that question. It was very, very good. Took profits this week on new all-time highs. I'm never going to fault somebody for taking profits. I'm addressing AVA in the group. Moved that into a money market, SPRXX, ready with powder. What blue chip ready with powder? What blue chip dividend stocks look like value in today's market? AVA. Man, that is the $100 million question, certainly. You know, if you were without some of the stocks to own forever that I just rattled off for you, I would certainly look at taking some starter positions in those. Now, those starter positions have to be relative to your overall portfolio, okay? I would hope that you still have a good exposure to the stock market, whether or not be through one of the many conduits that I offer on this channel, you know, a good S&P 500 fund, you know, maybe a good mid-cap fund and a good small-cap fund, okay? You know, VB is the one that I offer. VO is the one I offer. VOO for your S&P 500. And I know I'm rattling these off quick, but I would really love for each and every one of you to have the ETF page saved in your favorites on your computer. I have it saved right now, and it's open for this particular live feed. All right. It's basically my shopping list. Okay. It's everywhere that I pull my financial products for, whether it be the treasuries market, whether or not it be the ETF market. That's really my shopping list. And you don't need to look a whole lot further than that. Okay, Avi? So assuming that you have those products in place, I would love to see you have exposure in Apple. And I know that these answers might be kind of cliche for you, but I'm not looking to reinvent the wheel on the Independent Investor channel. There's just way too much money to be had by investing in blue chips. And I can sit here and rattle off blue chips all night. Do I think they're all a good value right now? Well, value goes out the window when the stock market starts to come back. That's why I recommend, if you're going to enter into some of these cornerstone positions, some good blue chips, scale into the positions, all right? And make those positions relative to your overall holdings. For example, if you have $10,000 in your portfolio that's diversified across the entire index, let's say you've got $7,000 in the VTI, and you've got your 20% in your VO, your mid caps, or your VB, the remaining 10% in the small cap, okay? And it's allocated across those three. And you had a little extra in there to go ahead and enter into some single stock. Make sure that no more than 10% is in any single name. And you could go even less than that. Buy a couple shares. Buy 2 or 3 shares of 3M, okay? Buy 2 or 3 shares of Apple. Now, that's what I'm talking about in relation to a $10,000 portfolio, all right? So when you're talking about a couple share position in Apple, you know, you're talking about almost $500. You know, take 3 shares. You don't have to start with those 10 share blocks, you know? I mean, 10 shares of Apple right now is going to run you, you know, 17, 18, 1900. It's trading. Actually, it's over 200, right? So you're talking about, you know, $2,000 for a 10 share position. I don't think you need to get so overzealous with a stock like Apple that's really trading at its high right now. Okay. So that's what I'm talking about. If you had enough to buy a 10 share position, okay, but that's 20% in relation to your total overall portfolio. All right. It's the same thing with Johnson & Johnson, you know, at $144 stock price right here. You know, buy a couple shares of it. You know, 2 shares will run you $280. You're getting a starting position in there. You're not going to diversify, but remember my rule. You've already bought diversification on the total stock index, right? So you can enter into that single stock and set that up as its own money machine and set it up for dividend reinvestment, okay? And you're setting yourself up for a decision down the line to add more to that position if the stock market does decide to correct on us, okay? Disney is another one. McDonald's, really all the blue chips that I've already offered. I'm a big fan of McDonald's. I'm a big fan of Cisco. Oracle is a buy right here. I love Facebook. I mean, Facebook is a blue chip as well, for crying out loud. You know, I love Google. You know, technology is just on fire right here. Pepsi is a blue chip. Any one of those you're going to win with. Walmart, all right? It doesn't get any better. If you wanted to enter into a 10 share position in a big blue chip company, $800 is going to buy you Walmart, Walmart's, a 3% dividend payer. Set that up for dividend reinvestment and start that Walmart money machine for you. And that'll get it done over the long term, and then add to that position over time, either with capital or enjoy every quarter that dividend is paid for you. You're accumulating more and more shares. Okay, awesome question. Thank you. If you're looking for possible value at Smuckers, no doubt. Absolutely. Thank you for that, Brent. That's smart. Yeah, Smuckers is awesome. Financial investor. Yep, you guys are conversing. I love it. I'm very curious about Chase, new trading platform offering free trades. Already used Chase, might try it out with some. Yeah, so JP Morgan is one of those stocks that I recommend forever. It's really, it's the biggest bank in the world. So that's why I throw it in there for your financial. I'm a shareholder in JP Morgan. I did parlay some of my stock and kind of reduce because I took another position in financials in both BlackRock. Okay, not to be confused with Blackstone. I own BlackRock. Okay. I took 10 shares of it. It's $475, guys. So you can do the quick math on it. It's a good asset play, and then also Citigroup in the financial sector as well. So a couple positions that I took, I kind of diversified my financials position there. But I endorse that. Please let me know how it goes for you, because I'm a big advocate of JP Morgan. And if they're going to do something, they're going to do it right. And hopefully they do right by the individual investor as well. And don't try to, put some sort of 1% trading fee on there or 1% management fee. And hopefully they're receptive to offering customer service that is tailored toward those investors that are interested in self-directed investing, okay, which Merrill Edge does, and hopefully Chase kind of follows suit there. I've got Tim Tellers on the line here. Took a couple shares of Kronos Group 3 weeks ago, and it jumped up 45%. What's your take long term? I don't know. I don't cover Kronos. If somebody has a response for Tim, you're kind of in the same boat as, those folks that took the position in Canopy Growth as well. You're up quite significantly, man. You're a winner. And if you string together a lot of those wins, don't get overzealous, because you're gonna lose as well on some of your positions. But don't be afraid to take profits. You could take half of the shares, put that capital to work in something a little bit more safe. Guys, if we were playing in a 30 or 40% recessed market, you're going to see a different independent investor. You're going to see the same Ryan, but you're going to understand that I will put on a reverse philosophy in a recessed market, as I do right here. I tend to be a little bit more defensive as the market is at an all-time high. That doesn't mean I change my investments per se. It just means I change my perspective as far as just continuing to throw money at a market that it is at an all-time high. And if history has taught us anything about the stock market, to be exact, 45 different times we have entered into recessionary sessions in the stock market. One thing is tried and true about each and every one of those: they have provided significant buying opportunities in the stock market's history. All right. So do you want to be doing the majority of your buying at an all-time high? In my assessment, no. And you'll see that twist of philosophy when everybody's going to come onto the independent investors channel and say, rah, 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 Ryan, you made me an investor. I've lost money. All right. And it's one thing that you have to ingrain in your head. If you're going to be an investor, understand that you have never lost a dollar unless you hit that sell button. All right. That's when you come back and you re-emphasize your validation as to why you became an investor in the first place, right? Why you set long-term goals when you initially set up those accounts, why you entered into good quality stocks, that Walmart's not going anywhere. Neither is Home Depot or 3M or Wells Fargo or JP Morgan or Citigroup or Apple or Cisco or any of these other good companies that I could continue to rattle off that have been established for, in many cases, over 100 years. J&J is over a 100-year company. It's not going anywhere, all right? But that does not mean that it is not immune to a correction if the stock market decides to go south on us, all right? So you'll kind of see a change in my philosophy a little bit. Back to Tim Teller's question, right? If you've made that win right now while we're kind of teetering at a record high in the S&P right now, go ahead and take some profit. I'm never, ever going to fault you for taking a profit. And at a 50%, that's kind of a rule of thumb of mine. If you're up 50%, it's eligible to take some profit. Because if you just, you know, Jim Cramer is a guy that I've followed for years. You know, pigs get slaughtered, right? Bulls and bears make money. That's a really good philosophy if you take that to heart. And don't be afraid to pay yourself first. You're a winner. Keep half of the shares and take half of the shares and diversify them, maybe in a diversified index, or maybe put it on the sideline. That's fine too. Or enter into another blue chip name and kind of diversify yourself. All good options. All good options. I mean, you're a winner. Thank you, Tim, for that question. Very good. Nice to see you again. Baby cakes. It's nice to see. It's nice to be doing this. I just enjoy the heck out of it. It's my favorite topic, and I love sharing it with you guys. I really do. Love sharing the topic with you guys. I'm glad we can get some reciprocation on the live feed because the regular YouTube session is a one-way session. Do brokerage have an income limit like Roth IRAs do? They do not. That's the beauty of a brokerage account. Stings123, my very first member of the live feed tonight, asks a very important question. But please keep in mind that a brokerage house should never come before a good retirement account. I want you guys to take the right order of precedence. All right. If you're employed and you have the opportunity to fund and take matching contributions in a 401k, that's absolutely your primary option. Okay. I want you to devote whatever percentage to that 401k to make sure that you are getting your free money. You're maximizing your free money. Okay. If you're seeking out an additional account on top of that, then you go ahead and go with your retirement account on top of that. If you have a spouse, double up on the retirement account, okay? Then if you need to dive into the brokerage account, what does that mean? It means that you're doing everything you can on the 401k, and it means that you're maxing out the retirement accounts and tax protecting and wealth preserving all that money, and you have no problem max funding that every single year at $11,000 a clip for married or $5,500 for single, right? Those are those limits that you're referring to in there. Then go ahead and justify a joint brokerage account if you're married, or an additional brokerage account on top of the preliminary 2 or 3 accounts that I've identified for you guys, okay? Because the brokerage account, unfortunately, is going to be somewhat restricted to some tax implication, especially if you do short-term trading, which I do in my brokerage account, okay? I do some of that. I was able to accelerate my earnings last year by $10,000, and I'm on pace to accelerate even beyond that $10,000 in my brokerage account this year as well, but that will be taxed as earnings, okay? And that's kind of the downfall of the brokerage account, okay? But I am in a position where I do own the employee sponsored, I own the 2 Roths, I max fund them, and I own the joint and also 2 additional brokerage accounts on top of that. So just make sure that you're going about it in the correct succession, okay? Don't start a brokerage account at the expense of your good retirement account, or if you're lucky enough to have exposure to a safe 401k, please take advantage of that option as well. Excellent question. Thank you. I haven't ran across any brokers that have max limits, just men's. Exactly. Brent's re-emphasizing my point there. That's why you kick into this community. Maybe you come into it and you leave a little bit smarter than the way you entered it. So very cool. Thanks for the help on that. Nice to see you here. Laugh out loud. Well, it's nice. You're talking to Brent. Thank you. Holding both Canopy and Crone, high quality problem right now. Feel like taking a bit of profit. I would. I really would. Go ahead and take some profit. And again, if you really like the name, remember it's a high growth. So if I'm telling you to take profits and it shoots up another 50%, don't come back and badmouth me, because I told you to take profit and realize some of those winnings. Okay, you're playing with house money. But I do actually think that the companies actually continue north. They're hot right now, very hot. But playing with fire, you can get burned. Okay, it's just speaking from experience. Okay, guys, you can't get overzealous. All right. Don't expect that stock is going to go up for forever. Okay, because when it's least expected, it will turn south on you, and it can be very, very painful in a growth stock when it does turn south on you. And then you're going to be second guessing yourself. And you always want to try to be as proactive on the stock market as opposed to being reactive on the stock market. Anything reactive is probably going to be bad. Okay, so taking profits proactively, I'm never, ever going to fault you guys for doing that. I applaud you for doing it. Mikey, cannabis stocks are volatile as it, yeah, it is. And I don't have any exposure. You guys know that. I would rather invest in the industry indirectly. Like I'm saying, I do endorse Philip Morris, Altria Group. Those are going to be the folks that benefit. Johnson & Johnson is actually in the discussion as well. A couple other names that I haven't mentioned in the healthcare sector that I actually retook positions in this week have been both with Pfizer and Merck. Okay, the big boring blue chip Increda stocks. I mean, they really are, and those can be considered cornerstones as well. And at $42 a pop with such a high dividend in Pfizer, if you guys are looking at your portfolio and you need some healthcare exposure. Pfizer and Merck, really, I own all three of them right now with Johnson & Johnson, and I'm proud. Those are really my top three in the healthcare sector. So took your advice on VOO. It's great. Yeah, it is. The way you want to invest in the ETF, either VOO or VO, okay, which is your mid cap, and then VB is your small cap. Certainly you do have the green light to me. If you wanted to try to diversify your base a little bit across the ETFs, I don't want you to own certain ETFs at the same time, but you can definitely own the VOO and the mid cap and the small cap at the same time. I would just like to see that a majority of your holdings is in either the VOO or the VTI or the VYM. Okay, those are some of those broader based large cap. There's a mega cap growth name in there. I could probably kick over to the Vanguard ETF list right now. But again, that's something that I want you guys to have at your disposal. Remember the shopping list. Okay, when you guys are looking to add that ETF exposure, VOO is great. Your S&P 500 is really a flagship exposure to the U.S. stock market. I'm glad you're enjoying it. I do caution you in this regard. If you, depending on the amount of money that you put into the VOO, I want to make sure that if you've put less than $10,000 in there, then you're okay. However, if you've taken $50,000 or $100,000 or $500,000 and put that all into VOO, I would highly encourage you to reassess your risk tolerance, because if the stock market does retract back, I would expect that you're in a position to add multiple hundreds of thousands of dollars to that position as well, to shore up that and basically buy it down. Okay, so some advanced trading perspective, if you're donating a lot of money or devoting a lot of money to the stock market with it at an all-time high, if you've got anything less than $10,000, then you're good to go. You could take a reduction in that portfolio and just dollar cost average, and over time kind of make up for that reduction if we do enter into kind of a downturn right now. That's what I've done with my new position in VTI and my new position in VO, which is the mid cap, and then the small cap position that I took in VB. I've opted to take a little bit smaller positions. I believe I took 50 shares of VTI. I believe I took 40 shares of VB, I believe, or 25 shares, I believe, half in VB and half in VO. Okay, so that was kind of the thought process I used in that, I really don't want to expose a big block of money to the stock market right now at an all-time high, guys. So I'm getting down. I got Chuck. Thanks for the shout out. You're welcome. Long-term is the plan. Yeah, you say that, it's really easy to resonate. You've basically entered into what I feel is the best S&P ETF on the market. Okay, SPY is a good one. There's an iShares ETF out there. I know Chuck Schwab has their version, but at 0.04 expense ratio in the VOO, I think you're going to do great in that. Make sure that it's housed in the self-directed account, please. I hate to be redundant on this point, but VOO is going to act different in a managed account than it's going to act in a self-directed account. Okay, and if there's any takeaway at all for my subscriber base, that is one of those takeaways that you guys should be so excited to understand, man. It's so important that you understand that VOO in a managed account is going to act so much different than in a self-directed account, because in the self-directed account, you're not going to be putting all the risk forward without the reward. Okay, in a managed account, you're going to be putting the same amount of risk forward, but you're going to be paying the middleman to put that risk forward. And that is the main difference between my message, is that I will acknowledge the importance and the beauty of VOO as an investment product, but I spend just as much or more time focusing on the bucket or the account that you house this important asset in. You put those two together and you're powerful. In other words, you're empowered, okay? And that will and always will be the root of the Independent Investor Channel's message for our subscriber group, all right? I've got Daryl Rika who hits us up here. Just thanks for your advice on Facebook last week. You're very welcome. That's easy advice to give. That's a no-brainer, okay? Facebook makes money hand over fist. Every business in this world has to do business with Facebook. Their multiple is quite attractive at this level. It's more attractive than Amazon. I mean, their multiple is kind of in the stratosphere. Little different valuation scheme that we're looking at with Amazon, but Facebook is a no-brainer. It's in the same category as Google, in my opinion. Fantastic, and I own them both. I own 10 shares of Google. I own 30 shares of Facebook. So put your money where your mouth is, okay? I'm not on here to bark a bunch of recommendations on stock I'm buying, and I don't actually ever buy the stock. That just baffles me. Actually, it irritates me, to be honest with you. If I don't own a stock, I'll tell you I don't own it. If I do, I'll tell you that I own it, and I don't mind recommending it to you guys. Certainly always do your own research before you enter into a stock. You can make a losing position, a winning position. What I mean by that, if you held Facebook when it was over 200 and you're holding the stock, the question for you guys, if you've listened to the message tonight, is have you lost any money by holding Facebook at 170? The answer is no. All right. Taking note that gold stocks are at a 52-week low, modest dividends. Been looking a little more closely at Newmont Mining and Barrick Gold. Any advice on these stocks? In all my culmination of experience, and I'm addressing Daryl Rika's question, I know some of my favorite investors do invest in gold stocks. Ren Gold is one of them. Certainly, I would never touch a mining stock. They are just way, way too volatile. And in one of my my top 5 books that I recommend, one of them is The Blueprint for America. And I think I've honestly been the only one that's ever recommended that book through YouTube. It speaks on this point very, very implicitly about just owning the hard asset, which would be my choice. I would rather own silver, actually, I would rather own over gold. But certainly, I don't mind pushing forward the advice to accumulate a certain percentage of the portfolio, which I always start at 5% in precious metals. But silver to me is actually more attractive than gold at $14 right now an ounce. And I recommend owning silver in all the different denominations. Unfortunately, I can't offer any expertise at all on owning the coinage itself, or vintage coinage to be specific. I'm actually interested in owning the precious metal for what it's intended for, and that is in case of a catastrophic downturn, that I actually have denominations of currency that can really pay dividends if the stock market really turns south on us, and that $14 an ounce silver now becomes $50 an ounce, okay? Don't think that it can happen. Mark my word, it can happen, okay? So I'm into junk silver just to have, again, the denominations of such. I like the idea of bullion in a lot of different denominations, a lot of different bar denominations, 1 ounce, 5 ounce, 10 ounce. If you have the means, you can increase that as well. And then also coinage as well in silver. But gold is right in there. But I'm sorry, I can't give you more than that on owning the specific. I know that there's companies that will basically give you a note on how much physical gold you own, and they will take on the safeguarding of that physical gold for you. You can get it at any time. You can sell it at any time. And then, of course, there's gold stock out there as well. Owning gold stock is really just not something that I'm into. I would rather own the physical gold itself. Very good question, though, Daryl Rika. Thank you so much for that. That's really awesome. I wish I could do more videos on precious metals. I have offered the vendors that I prefer, Provident Metals, on a lot of personal recommendations for myself. They seem to be kind of the lowest spot value when you're ordering. There's really good deals on Provident, and then Kitco is the other reputable vendor that I offer, and I offer that through the recommendation that I got through the Blueprint for America as well. So that first, I think Stansberry Research is the one that offers it. It's Rand Paul's dad, Ron Paul, actually, who endorses or helped write the book, I believe, something like that. I haven't read it for a while, but very eye-opening on owning silver and gold abroad, how to do cross-border gold. It's very, very interesting read. So, hi, Ryan, quick question. I'm already maxed out of my contribution this year in my Roth IRA. Awesome, as I am as well. It's kind of restricting as well, being in that position, but I congratulate you, and you get an Independent Investor Channel pat on the back for being maxed out in your Roth IRA. I'm now using Robinhood to hold dividend stocks, focusing on financial stocks, Canada banks, REITs, and energy. Smart. You're using Robinhood for what it's intended for. If you're having no problem funding your Roth IRA, and I hope that it's a self-directed Roth IRA, please confirm with me that it is in fact that. If it's not, I need you to reclassify that Roth IRA to a self-directed account. Assuming that you are in a self-directed account, I endorse using Robinhood for that very purpose. You're getting free trades. Make sure that you're holding the stock, long term. Make sure you understand the long-term and short-term capital gains implication if you do end up trading and taking profit in one of those blue chip names in Robinhood. But I think that's an excellent example of how to use Robinhood correctly. Okay, and in that particular case, and in my case as well, I could probably use Robinhood the way that you're using it, because I'm using M1 Finance and not taking advantage of the fact that they offer retirement accounts. I'm just using their brokerage option through M1 Finance. It gives me the same option. Basically just kind of comes down to aesthetics. So awesome question. Very good. I highly endorse that. You're using it the right way. Excellent job. Excellent question. Does that sound okay to do? Yes. Thank you for that question. Guys, I'm going to kind of get to the end of this live feed here. We've been going for a little over an hour and 10 minutes. I'm going to address, I've got GZ Boy here at the bottom of the script here. I'm very excited about tonight's live feed. Thank you so much for the engagement. I am going to start to wrap it up after I address these last few scripts of questions. I think I got to everybody. I missed a few folks. I missed Nyella last week, and I apologize for that. My script jumps around a little bit sometimes. If it does, and you happen to be the unfortunate beneficiary of that jumping around, I don't do that on purpose. I'm trying to talk and I'm trying to follow the script at the same time. But I apologize for that if I missed you. But thank you guys for everybody that tunes in. You guys are what makes the power of these live feeds so successful for me, very fulfilling for me, and quite frankly, it's the payment that I get from you guys. Hi, Ryan. I started investing in high dividend ETF that includes REIT companies. When I receive the dividend from this ETF, will this dividend will be taxed as qualified dividends or ordinary dividends? It really just depends. I mean, you'll be housed from either qualified or ordinary within a Roth. If it is in a brokerage account, I believe those are qualified dividends. Okay, please correct me if I'm wrong. I obviously set every single one of my tax accounts up, my brokerage especially, for import into my TurboTax. I just like the cartoon nature of TurboTax. It's pretty easy to deal with. But I do set that up to automatically take my 1099 divs and interest and upload them into the software automatically. Okay, so don't mark my word for it. If I'm wrong on the qualified portion in a brokerage account, linking those two accounts together and uploading that automatically, it's going to take you a little bit of work within the tax software for your taxes. But I highly recommend that you take that little extra step and make sure that you can upload those 1099 divs and interest into your tax software, and it's going to answer all of those questions for you. Okay, it's going to list everything out, and it's going to give you the bottom line whether or not you're taxed on that. Now, in the Roth, of course, neither one of those will apply, and ETFs can be set up for dividend reinvestment within the retirement account for you. So it's a very powerful thing to understand and take away, where in most brokerage accounts, they cannot be set up for dividend reinvestment. So you will be subject to that tax, whether it be qualified or ordinary in that. And you will have to declare those in your tax software and pay the tax as appropriate. Okay, awesome question. Thank you for that. I'm interested in REITs, but been having doubts at which stock or fund to buy. Vanguard ETF probably is the best choice. I have family members that actually own the Vanguard REIT ETF, and it's a fantastic fund. And I'm not sure what application you're going to use the REIT fund for, if it's going to be housed in your Roth IRA. I believe the real estate REIT that my family member owns is actually within the Roth IRA, and it satisfies some of the real estate portion that is recommended for a diversified portfolio. And I could get you a ticker. I'll probably click over here real quick and actually get you the real estate ticker real quick. Stand by 1 second. Let me scroll down my list here, guys. I've got you off real quick. International, sector specific. Here it is. It's VNQ. All right. So VNQ is what what you're talking about there, Mikey. So VNQ, you could obviously go onto the Vanguard website. Again, remember the shopping mall for all investment products. And I hate to minimize it that way, but guys, we're talking about the best of the best in the industry. Okay, if it's not the best and the best in the industry, we're not gonna talk about it in our circles. We're not. There was an awesome comment that came through this week. And some of the older community in the independent investor channel are starting to kind of look to coordinate and get together and kind of discuss some of those strategies. I think that's awesome. I really do. I think it's fantastic for you guys to kick around some of these ideas about how you guys are building your own portfolios into your 50s, 60s, 70s. If you guys are part of that community of older investors and you're looking for where the hell do we buy these products, right? Well, Ryan mentioned, saving that Vanguard ETF. Start to educate yourself up on some of those products that are offered through those, and start to formulate your guys' watch lists within your communities built from some of those products that are offered through the Vanguard website, guys. So I have VOO in mind. That's what Becky says. Guys, that's top of the food chain. You guys have no idea, and hopefully you do. This is what I say all the time, and I'm speaking to Becky specifically about validating why it is that you own VOO. It cannot because Ryan told you to do so on YouTube. The Independent Investor channel said I need to own VOO, and I want you to understand that you own VOO. I want you to understand that you own 507 different companies, that it's weighted to the S&P 500. Why did you own VOO? It's because it's got such a low expense ratio. It's in the top 90th percentile of funds that are similar in class when compared across other comparable products. It offers a 15% year-over-year return since its incepted in 2008. Those are the types of validations that I want you guys to resonate with on your own. And finally, that you've taken that VOO and you understand that because it's such a low expense ratio, that we can put that to work in a self-directed account, put those two together, and you're powerful going forward. You set yourself up basically on autopilot to win over the long term. That's awesome, Becky. Thank you so much for that comment. It's a short comment, but it kind of struck a nerve with me as to what we're trying to get across on the Independent Investor channel for new investors, existing investors, and senior investors as well. You can add Vanguard. The question would be, what percentage of someone's pie would you allocate to that? Thanks. The majority, I think. If I were going to take, and I'm probably looking at I'm kind of looking at the small cap growth, K97, specifically to your question. I want it to be kind of weighted toward a little more aggressive for me, okay? But if somebody were looking to start M1 Finance, I love the 70-30, okay, approach. I really do. I like 70% in a little bit more of a large cap. If you wanted to be a little more aggressive, you could parlay that back to 60%. I think you would win in that range, okay? So if you did, let's say VTI at 60%, that would leave you a remaining 40% to either go a mid cap or a small cap allocation, okay? So your pie would be broken down as appropriate, okay? 60, 25, 15, you could do something like that. You could do 60, 20, 20. You could do 70, 15 if you just wanted to start it with a lower amount. You know, remember, the higher the dollar amount, the more you can spread it out across your funds. Now, you can get watered down with your ETFs. I don't want you guys owning 10 ETFs with $1,000 in there, okay? $1,000, you own one ETF, okay? 2,500, you could own two. Okay, with 5,000, you could beef it up and do the three-piece allocation that I talk about. And these are going to be some of the more streamlined specific allocations when I'm talking about how to invest $1,000, how to invest $5,000, and finally, how to invest $10,000, because it's all relative. You could put $7,000 in the BTI. You could put, you know, 1,500 into the small cap, and you could do, you know, $1,500 into the mid cap, and there's your allocation right there. So no set rules at all, but it basically comes down to your risk tolerance, you know, what your long-term goals are, and getting that good baseline set in. And I think from 50 to 70% is a really good mark to look at those large cap value or large cap growth companies, or ETFs, excuse me, that are offered through the Vanguard. VYM falls under this category. I think VUM, MGK is one of them, which is mega cap growth. You know, of course, VTI, VOO falls into this category, and there's a bunch of others as well that fall into this category. And it really just kind of depends on how you want to strategize. But I really believe we've provided enough tools on there for you guys to go on there and really search out those, because we've watered it down to, you know, 10 ETFs. I've watered it down to, you know, X amount of bond funds, if that's what your thing, and that's what you want, is some bond exposure, which is really geared towards some of my more senior investors out there that are over, you know, 50, 60, 70 years old, who should have a good bulk of percentage starting at 50%, in those bond funds. There's no reason to look any further than the long, intermediate, and short-term treasuries that are offered through the Vanguard website. So I moved my Roth to M1, and I like it. 1979 wood in the house. Very cool. Thank you for that. I really appreciate it. I'm being thanked for the shout out. That's the least I could do, actually. This jumped around on me again. So I'm going to go ahead and scroll down. I missed a bunch of questions toward the end of the script again. I don't know why this does this. I don't know if it's with my connection, guys, or what, but I got a long script here, and we're going on an hour and 25 minutes on this live feed. But this always copies over so you can review this script as well. But let me review this really quick here. Yeah, own BX, the REIT, that's awesome. Limited partnership on BX. Microsoft just did a deal with Skype. Did you hear about it? I did not. That is awesome. I'm a long-term shareholder of Microsoft. I think I picked up 50 shares, I think about a month ago. And I'm long on Microsoft. So just killer discussion tonight, guys. I could probably go for 2 hours. I'm not going to do that to you guys. I understand your time is valuable as well as mine. I had a killer week this week, and this is kind of my release to come on and talk about finances, kind of change up my routine a little bit here. But I'm really sifting through. I've got Scott S. on the line, who I love to have dialogue with. Man, Scott S., I want to give a shout out to, who absolutely gives me, keeps me grounded, no doubt about it. I love the engaging dialogue with Scott S. Finally made it before you finished up. So I give you a call out on the Independent Investor channel. So thank you, Scott, for making your way in here, man, on the West Coast. That's very cool. Thank you for that. I'm glad I bought JP Morgan and my wife's IRA. Absolutely. It's a great blue chip to put, in a spouse's portfolio, if that's your thing. I actually own it in mine right now. I think the financial exposure in my spouse's Roth IRA is actually with BlackRock. And that's what I've kind of disclosed to you guys tonight. That 10-share position in BlackRock has given her some financial exposure there with BlackRock. So Jamin or Hyman Pandya as well is given actually a portfolio breakdown, which in my review here is fantastic. Guys, that's some of the strategic things you can kind of sit down with a pad and a pencil and just kind of script out what's going to make sense for you. All right. And it has a lot to do with the relativity of how much money that you're coming to the table with. All right. My point is, if you're coming to the table with $1,000, don't try to buy the entire stock market. Okay. That's about as plain language as advice as I can push out there for you guys to really kind of help you. All right. Don't try to buy into everything under the sun. Start small, scale into the market as appropriate. All right. And add those funds over time. Is having 47 different brokerage accounts too many? Now you're just being funny. I have 4, and they're all very, very justified in each case. I don't know what in the hell you need 47 different brokerage accounts for, but I actually think you're just trying to be funny, actually. I'd rather have a couple accounts with, I just went north of $300,000 in my investment account. So I'm a quarter millionaire on less than the average salary in this country. So it definitely gains me some credibility, and I say that with a straight face. I do. But interesting comment. Buy physical silver, but hasn't gotten down to 2008 prices, and central banks are selling their reserves. Brent, thank you. I stacked silver during the Obama years and promptly lost my ass. Yeah, no doubt about it. That it's something else, man. That chart is just absolutely nasty. It really is. And precious metal doesn't move like stock. It doesn't move as volatile as the stock market. That's why I recommend 5% of the allocation in precious metals, not the majority of your portfolio. That's for sure. Unfortunately, I have to press out the advice based on the current stock, the current price of silver, that it is probably more of a buy than a sell here at these reduced prices off of its all-time highs there that you're alluding to when it was up over $50 an ounce. GW Pharma, absolutely. Scott S., thank you very much for that. They're probably the best in breed, actually, in the cannabis. So absolutely, they're best in breed. If you want exposure to it, you could probably just go directly for it. I think when I was offering my stock picks through more of a back door in the healthcare industry, I don't really think anybody's going to be immune to putting out certain drugs. And I think Pfizer, Merck, J&J, all the big dogs are going to be part of it as well. And of course, Philip Morris will be more of a direct player in the offering as well. You don't think they've got their nookers in that business, man? You got another thing coming. Those guys are absolutely going to benefit from this. As the tide starts to turn and the status quo starts to change on the industry. So thank you for that. Metal's really cheap right now. I can't decide if it's at a bottom. You're never going to pick a bottom. You know, I just be realistic about picking a bottom. That's another YouTube video for another time, is, you know, being realistic about you know, beating yourself up. All you can really do is go off of historical, and I go off of the charts, especially. And if I hadn't mentioned it earlier, I was talking to Jared Odell actually before I came on tonight about the charts with regard to my decision to enter into some fixed equities right now, both treasuries and bond ETFs. And that was really my decision maker. I don't always decide on entering into a particular stock ETF by nature of only charts, but charts was a real tell. And if you guys look at that, you might see the same thing as me. If you go back a few years and actually look at where those treasuries and bond funds have come from. So I can't say enough positive things about TD Ameritrade. That is awesome. Listen, I'm talking to the obstinate one. And I keep those kind of in my head about positive recommendations for certain brokerages houses. And a lot of my recommendations are from those, not firsthand knowledge, but actually secondhand knowledge. And I think there's a lot of people that benefit from that secondhand knowledge. And I know TD Ameritrade is a top tier broker. And until I hear different, I will continue to push that out third party. You guys just understand that I push that out, not directly because I push out my Merrill Edge recommendation directly because I use the product. That's the only difference. Okay. Ryan, do you recommend max out my Roth on January 1 or do it throughout the year just in case the stock market will take a step back? I've kind of changed my philosophy on this. I'm no longer going to fund my max fund at the beginning of the year. It always seemed, and I've done it the last couple of years, the last 3 or 4 years I've max funded. $11,000 goes in there January 1 of every year. And it seems like after the holiday rush and after the euphoria, basically, for a lack of better terms, through the holiday season, I always take a haircut either in January or February on that lump sum. I'm actually going to go back to DCA and that money into the market at $458 per account per month. That's just what I'm going to do. I don't have a firm, tried and true answer for you. What I can do is speak on experience. And you're exactly right. It seems like putting that lump sum in there, it is a form of dollar cost averaging, but it's just spread out over the years. And basically, I want more injection points into the stock market. I typically don't dollar cost average in that I take a set day during the month. I will strategically fund the market when I get a heavy red day, 4, 5, 6, 7, 800 points of downturn. That's when the independent investor is stepping in and buying the market. Okay. So hopefully I'm going to allow myself 12 injections at $458 per injection per account. And I'm going to be using those injections to buy stock on those red days. So that's what I consider strategic buying as opposed to DCAing. It's the same philosophy, but it's just that I buy on the red every time I do it instead of buying either the market is up or down on any given day. Okay. Because you'll find that in the majority of cases, if you have a heavy red day, 6, 7, 800 points of downturn, watch what happens the next day. Okay. It's typically in the green. And I'm very pulsed in with the stock market, and it's just fickle in that matter. It just happens to react that way after a heavy red day. Okay. Cool question, guys. You guys are just whacking me with good questions tonight. I really appreciate it. Nyla just sends me a nice emoji. Thanks, Ryan. You're very welcome. It's just a pleasure to have you in the group. Another great live chat. I couldn't agree more. Thanks for the validation, Ryan. I do have a self-directed Roth, and now using Robinhood to hold dividend stocks forever. Thank you again. You are welcome. Thank you for getting back to me on that. Just for my clarity, I just wanted to make sure. Thanks, guys. Guys, I will wrap it up. VNQ is another one that's out of the ETF shopping mall that Vanguard is so nice to provide to us. I can answer the qualified dividend question in a fair amount of detail in the self. Thank you very much. Ernest is going to take this topic for action. If there is no one who is in this community that is not part of the Facebook group, this usually generates quite a few. Just request that invite from me. I've only kicked about a half a dozen people out of the group who were spamming the group. I want no part of that in my group. I want genuine questions that come into the group. It may not be me that responds directly to you, but any one of those group plank owners in that group will take care of you and get your questions answered. If you can't get your question answered in a timely manner, there's probably a good reason for it. Hit me up directly. I leave my direct contact on the Independent Investor channel. That is one way of getting a hold of me. Another way of getting a hold of me is to shelf your question for a week and hit me up on my 9 o'clock live feed every Friday night, 9 o'clock Eastern time, Eastern Standard Time in the U.S. We are coming from Virginia now, and you can hit me up with your question then, guys. So I can't get to the rest of these questions, guys. You really made it a very successful live stream. I wish you all the well in your investing future. You guys have a great weekend, and we will catch you next Friday on the next live feed. Thank you so much, guys, and I will catch you next time.